Test, 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 test.
Do you have it set for like optimizing or trying to clear out background noise? Because it sounds like it's pulling people from the background and putting them in the forefront. So I can hear traders and stuff in the back. So is there like a setting there that you're trying to like reduce noise, or is it changed at all?
How's that sound? Test, test, test. Chicago, St. Patrick's Day, the capital of St. Patty's in
I mean,
America.
It's fine when you're talking, but then it sounds hollow, and so it's looking for voices. So it's my voice sounds like it's in a tin can. The guys behind you sound like they're in a tin can. You should. Check one,
Test, Chicago Future Finance, Oliver Rennick Audio. Getting a little bit of an early start today for St. Patty's. Hit us with the cues in the chat. Noel Smith, first on deck. Howdy, howdy, howdy. Testing, testing. Getting ready for showtime. Options traders dream environment. VIX above 20. Market's going nowhere.
Yeah, it doesn't sound too bad now. It sounds better.
Harvest that premium, baby. Good afternoon. Welcome to Chicago Future of Finance. I'm Oliver Rennick. It's Tuesday. It's a little bit before the bell here. We got over an hour of time as stocks are in decent shape for perhaps a green St. Paddy's. Here's the chart for the S&P 500. Do we find some gold at the end of the session? I think I'm Irish enough to get away with some of the St. Patrick's Day stuff. I got like a quarter in there somewhere, so I got nephews making leprechaun traps, so I think I can make a few St. Paddy's jokes. After all, this is the Irish, St. Paddy's capital of America in Chicago, basically. Jamal Chandler put out a great post on X. Buddies over at Tasty Trade, Tasty Live, with the interview with Tommy Lee Jones filming Fugitive here on St. Paddy's Day in Chicago. That was a nice throwback. Market has kind of been the options trader's dream here. Volatility is coming in, but of course it's been elevated. And to see VIX still in that called a long-term uptrend basically since the beginning of the year, it's a fascinating situation, and one that is kind of the textbook environment for options trading, in which high probability trades rely on harvesting premium. I was playing a good bit of poker over the weekend, getting back into the swing of things. And the analogy for harvesting premium in the options market to poker is basically in a tournament where you're collecting blinds. You're raising in position to collect blinds, to collect premium. That's essentially the core of the options market. So when you've got VIX elevated, which is essentially above 16, but quite elevated at 22, and 5 months basically of the S&P 500 going nowhere, right? We got close to 6,600, which we first reached in September at the end of last year. But it's really been a 300 to 350 point range, basically a 300 point range, from 66.50 up to 69.50. That means that iron condors have been making money. It means that butterflies have been making money. It means that generally selling volatility for the most part, as long as you're respecting that range that has widened out to the downside, it's been a pretty good environment for options trading. We got a great show coming up. We got Noel Smith on volatility. We got Peter Tchir on geopolitics. We got Pete Najarian, Charlie Moon, and Chris Brecher, all with stock-specific trades. Before we get into them, real quickly on the risk radar, just as a reminder from last week, it's all yellow. It's the cold play market. I think that reflects where we're at. I'm looking for generally optimism to pay off. The stock light's been going back and forth between green and yellow because when we're above 6,800, that's the key line for me. Stocks go green. I've talked about Bitcoin as I removed that red light weeks ago. That timed pretty darn well. I got to be honest with Bitcoin's strength. I just love. The only thing I like more than getting Bitcoin right to the downside is getting Bitcoin right to the upside, because you know how I feel generally about the asset as a cynic, but the price action on this thing is such a testament to understanding technicals and markets. Bitcoin had found support at 60,000. It's firming up. That's why the red light's been off since it had that double bottom at 60K. I also think that is a reflection of lingering risk appetite in markets that could come back into stocks overall. A lot of people were talking about Bitcoin related to the geopolitical stuff, and I don't buy any of that. I think more importantly, look at cloud stocks, CLOU or IGV. We're going to talk about this with Peter as well. Those have been rebounding at the same time. So the correlation between Bitcoin, which is software, and the actual software group is unmistakable. And that's what's more important, is the fact that these two groups got beat up at the same time, and now they're rebounding at the same time. Look at the chart of IGV versus BTC. They look pretty similar. Look at that. So AI took basically a hammer to inefficient software and tech, which included a lot of cloud names and included Bitcoin as well. And now they're both bouncing back together. So with that said, let's talk some volatility. I got Noel Smith on the line with me on the Zoom. Noel, what's going on, sir? How are you? Convex Asset Management, good to have you on the show.
Yeah, good to be here. You know what's funny is I'm from Chicago, and St. Patrick's Day is quite the thing in Chicago. And my wife went out yesterday to buy stuff for the kids for St. Patrick's Day, and there's nothing around. Nobody in Nevada seems to care about St. Patrick's Day. So it's just a totally different culture.
Isn't luck a pretty important part of living out there?
I guess so, yeah. I mean, I don't really gamble much, but, It's just funny how different cultures, especially even out west in general, people care a lot less about like pro sports, holidays like this. It's not the drunk fest like it is in Chicago.
Yeah, no, that's totally true. Actually, to be honest with you, it's a little bit too much of a drunk fest for me. I can't even keep up. Though I will generally pop into, say, O'Neill's downtown, unsponsored post, no sponsorship, just friend Justin O'Neill and crew, kind of a legendary Chicago family, to be honest. Always has a great. I mean, they got the bagpipes and everything, like on the bar top. So
Yeah.
The sticky bar floor is more a Chicago thing than an Arizona thing, I think.
Absolutely. Yeah, so anyway, the thing that I've been kind of keying in on is you see this compression of skew. Like, the idea that what you pay for an option and how it performs, that spread has been a little bit wide lately, and it's really kind of coming in. It's not coming into collapse, but it's coming in. You've got VIX tomorrow, you've got Regway options expiration on Friday, and I feel a lot of this premium is being burned, and people that are paying up for a lot of it, it hasn't really worked out for them. So the idea that you've been selling options into a high vol environment, that's been paying the bills. Like you said on the onset, the S&P 500 hasn't really gone anywhere in 5 months. Well, that's still a trade. I mean, everyone's like, okay, well, I haven't made any money in my SPY or my SPX. So if you've been selling SPY calls or SPY puts or whatever, some kind of volatility around that, that's been a great trade. So there's still plenty of opportunity to be had in this marketplace.
Yeah, I mean, that really is the case, right? I think that for a lot of people that are looking at their, IRAs, 401ks or whatever, would like to see the market just uptrending again. But for the options traders, I mean, this is kind of just as good of a situation, which is when the market kind of goes nowhere, goes around in circles of a 300-point range, and VIX stays elevated. So, I mean, if you know how to work this environment, I think a lot of people would be fine, staying in this situation, because presumably, if the uptrend continues, then we would have, vol continue to come back down, right?
Well, you've got cross-asset volatility is up across the board with the maybe exception of bonds. You've got high-yield vol up, FX vol up, oil vol up, metals vol up, equity vol up. Bond is up a little bit, not that much. So there's just all kinds of things to do if you're paying attention to the options marketplace. And I assume if you're watching this or listening to me, you have some interest in options. So there's still stuff to do.
Yeah. Tell me about what you're thinking. We've talked about a few things that made sense in this environment. Iron condors. I hear a lot of flies going off in the pit behind me as well. If you're going to use, if you're going to pick a direction, to some degree spreads, I think, because, the kind of idea, the regret associated with spreads is that you get the direction right and you're going to go, oh, I wish I wouldn't have sold the contract against myself. But in this case, in the market where we're not blowing out in either direction, those also seem like they make sense.
Well, I mean, naked options are a whole nother gamble than spreads. The reason you put on a spread is because you know exactly what you can lose if things go wrong. And yeah, if you're buying a spread, the max you can make as well. But if you're just out there, if you want to short volatility, the marketplace is very clever. So in other words, they know that oil's probably going to go back down. So the idea that you are going to out-clever the marketplace, because if oil pulls back 3 or 4 or 5% in price and then also in volatility, well, you paid a bunch of money for some options that are priced on a certain vol here, but if it goes here, you might not even make any money. You probably won't make any money. So that's why people turn to things like spreads or flies. Typically, flies are going to work better than spreads in that kind of a situation because your downside short out of the money strike is still going to be priced for that vol at that level. Because remember, when you're trading on vol, there's what is right now today, and then there's what is at that future price. So if the idea that oil goes down and oil vol goes down, well, that's priced into it as well. So that's not really any edge there. You have to be able to outsmart the marketplace in aggregate.
Okay, which is a hard thing to do.
Yeah.
But these types of environments, you have to go with what I think normally works. And, obviously big blowout moves do have a kind of a steady volatility move ahead of them, but normally big blowout moves don't happen. So it's hard for me to want to, it's hard for me to not want to try and collect premium and bet that things cool off, especially because there's a geopolitical element behind it, which is generally just the core of the dip buying routine that keeps markets balanced. Now, I'm not a geopolitics expert. our next guy, Peter Tchir, might have some stronger geopolitical thoughts. He knows a bunch of like generals, and so it's not that I feel strongly about like Iran or anything. It's just generally geopolitical stuff will eventually take the backseat to earnings-driven growth. But in the meantime, volatility is giving us a nice sandbox.
You've got Micron tomorrow, you've got FOMC, you've got options expiration, and the idea that oil is driving the bus to me is what makes the most sense. And then, the proportional moves with every Trump comment or Trump tweet. Oil is going to bleed into everything regarding rates, regarding inflation, and that's going to drive, right on down and have a cascading effect within the marketplace. So if you're really looking to come up with some kind of edge, I'd be paying attention to oil and oil vol, and then how you want to transmute that into the asset class of your choice.
Love that, transmute. I think I learned that in Professor McGonagall's class at Hogwarts School of Witchcraft and Wizardry. That came out of nowhere there. Sorry about that, Noel. Okay, so I like the point, though, about the transmutation of crude oil vol, because here's the thing. Crude is looking pretty cozy at 95. I like the fact that the market's not breaking down today despite crude staying elevated. The fact that equity vol's coming in a little bit today, while the crude vol, I get maybe it's also coming in compared to a week ago, but the price is not coming down.
Yeah, but it's staying where it is, and that's volatility is all about variance, right? How much is something moving from where it usually was? So oil. Last week we talked about. I said what I expected was price down and vol down, which makes it very difficult to trade things like spreads or outright options. That's why I gravitate toward things like flies, because I think that's just a little bit easier. But if oil vol comes down, everything else will kind of come down, and then the important part of that is options that were 35 delta magically turn into like a 25 delta because the volatility is getting sucked out of them. And then what that'll do is it'll cause the hedging function of those options or the futures against those options to kind of buoy the market up. So, we have more of a bullish stance here than we've had in a little bit of a while, because we feel like with the volatility being sucked out of the marketplace, that could easily push us back up towards 7,000. The market isn't priced for that, just so you know. The market's not priced for that at all.
Okay, I like that. Does that come back to the skew point that you were making?
Yeah, so if you got the little teeter-totter of skew, right? High puts, low calls, and if those puts start to come down, those calls will start to come a little bit more into balance, and then a lot of activity might get pushed that direction. And it's not so much that I think the market is justified being at 7,000 or 6,500. It's more an artifact of the mechanical hedging that will come into it if vol gets sucked out. So if there is peace in the Middle East, or the Straits of Hormuz start to flow yet again, oil vol will come down. And then that will start to bleed into equity vol, bond vol, and everything else. And it'll just start sucking some of the volatility out of that. It'll push things a little bit higher.
Yeah. Love that. A message too, back to options 101. Generally, some people describe it as owning theta, fading the time. I think sometimes those that verbiage kind of gets confusing to people who are not experts in that realm. But basically, fading premium over time. That's the way this game mostly works. Let's hope, I think, that it does continue to come in for the overall potential for the price action of stocks to recover and the messaging that might bring with the geopolitical stuff. But for now, little changed markets with VIX 22. Great stuff, Noel. Love the examples on trade structures that make sense here. Love the eyes on the volatility, as always. Unique and good take. Appreciate you very much. Thanks, Noel.
Thanks.
Convex Asset Management, Noel Smith. And by the way, I do think that's an important point as well, thinking about how the crude oil price is remaining elevated, but the stock market is kind of shrugging it off. I think that's the key to bring in my next guest. Going to blow this first break since we're on the subject of geopolitics. Mr. Peter Tchir is on the show, head of macro strategy at Academy Securities. Peter, what's going on? Good to see you. Make sure you're unmuted for me on your end, Pete. Saw your mouth move. Think we got you.
This better? Did that come through?
Yeah, there he is. What's going on, man? Long time no see.
It's been a while. I'm looking forward to this. Been interesting times for us at Academy Securities with all the geopolitical stuff.
That's what I was saying. Okay, I mean, I haven't had you on my new show here from Chicago. I think a lot of people who've watched my shows over the years hopefully recognize you. We've been talking for a long time, but again, give us that explanation of what makes Academy unique, because I know that you guys are in a big way owned by veterans. You have access to really like kind of the top tier military minds in some sense, right?
Yeah, so we've got, we're about 200 people, but we've got the Geopolitical Intelligence Group, which is just over 30 retired generals, admirals, and some former CIA and national security people as well. So they kind of come together to frame a lot of how we're looking at the geopolitical risk, what's going on in Iran, what the next steps are. So we've been fairly comfortable that this is kind of slowly grinding to an outcome. That's good. We think we've got another week or two before, if it's not resolved by then, you start seeing kind of really bigger knock-on effects in Asia, ex-China, and you see it in Europe. We probably have a month or so before it really would affect either China or U.S. in a way that's not, quote-unquote, fixable.
Peter, someone in chat says that if it were all about geopolitics, XLF wouldn't be hurting the way it is, aka the financials. I think that's kind of an interesting point. But there is a back way around this, arguably, which is the surge in crude, could connect with inflation, which could connect with the move in yields. But boy, that stuff gets so messy, especially because when the Fed started cutting a couple of years back, interest yields went up. Tell me how you're thinking about the geopolitical feed through into inflation. Feel free to take your time with the answer, because I know it's a complicated subject.
Yeah, so one, I think there's kind of three narratives at play here. One is, yesterday and today, there's a lot, you've got NVIDIA, you've got, their conference, you've got Jensen Huang speaking, you saw markets try and rally on that. So to me, I'm paying a close attention to IGV, which is the software. That seems to be fixing itself a little bit. And more importantly to me, I think there's been a lot of talk about private credit. And I think that private credit fear is a little bit overdone at this stage. So I'm actually getting a little bit constructive on BDC, so Business Development Corps. BIZD is a pretty decent ETF for that, or as good as an ETF as I can find for that sector. And I think that's been a big factor in XLF and financials. Isn't just the oil, but you've had this concern. What's the private credit risk? Is it hitting insurance companies, et cetera, et cetera? I think that's a bit overdone. So I think that's a potential, pop for the market, is saying, hey, we oversold things because of this private credit. So I think, to me, private credit's probably been more of a drag on XLF than what we're seeing necessarily out of Iran. But that hasn't helped either.
Peter, what was that ticker? BIZD? Was it? I think I got the wrong one. What was?
Yeah, Business Development Corp. So it's been kind of beat up pretty hard. It was one of the first ETFs, I think, that actually was trading well below its Liberation Day sort of lows. It's had one kind of bounce, and now I think we're seeing a little bit more. And so this is a series of Business Development Corps. They have been kind of targeted as, going to be hurt by what's going on with the private credit story. There are some business development corporations that have gated people. But again, this was all in the documentation, right? They were specifically designed to fight against forced redemptions during times of illiquidity. And I think this is going to stabilize. I think we're going to say, hey, you know what? Yeah, there's some noise out there. There's definitely going to be, whatever we want to call it, cockroaches, as Jamie Dimon has talked. There's going to be some cases of fraud. There's going to be some industries that, struggle. There are deals that are called annual revenue renewals. So there's parts of this that are not good. It takes a lot to drag this industry down, I think, as far as it's been brought. So I'm kind of looking for that to be a bounce, and I think that will help financials all the way through.
Okay. BIZD.
And I'm like right at the bottom of this chart. So, yeah, I'm not saying I've loved this for a while. We're just kind of coming out with a note today to say, time to take a poke at this.
Okay. BIZD, VanEck, BDC, a Business Development Corp income ETF. So there's a yield part to this, the income side of it, Peter, or is
it's both.
Exactly what this is.
So I think that's why people bought it, for the yield, right? So what a Business Development Corp is, they make a lot of loans, many of which were the private credit space, and they borrow money. So you as the equity holder are leveraged exposure to private credit. And so that's how they generate their dividend. A lot of people, I think, kind of get sucked into playing it from a dividend standpoint. I think right now, yes, I haven't even bothered, to be honest, I haven't even checked what the dividend yield is. I'm sure it's quite high, because I think in normal times it's 9%. We've had this price drop. I'm playing this for a total return perspective. I think it's been overdone, and people are saying they're over-leveraged to private credit. I don't think they are. I think there's a bounce. This is a trade for me. I don't know that I want to own it 3 months, 6 months from now, but I look at this, and I think the narrative has overplayed itself, and it's going to start pulling back. And you're going to start seeing insurance companies defend their private credit holdings. I think you're going to see private credit companies do a better job of explaining private credit. I think they got away with this being a black box and was so successful, no one cared. They're going to explain that, and I think we get that bounce. We saw this a lot even during the GFC in the early days when you had mortgage things. This is too early. People are throwing out the baby with the bathwater right now, in my opinion.
This is an interesting one. I love when somebody brings a ticker that I'm not familiar with. This is one of them. Love that, Peter, and why I always like to get your take.
And it's somewhere over $1 billion in AUM, so it's not a tiny, off-the-run ETF. There's some weird, I think you get a Schedule K and stuff like that, so there's a bit of a pain from owning it because of how it's structured, but I still like it.
Let me put some perspective on that real quick here. Make sure I got the right one. Oh, no, that's my Airbnb. Okay, there we go. BIZD, about 1.4 billion in there. So because of the yield, the income side of this, this does kind of speak to something. I don't want to go too off the rails here because I do want to get your thought on crude oil before I let you go, Peter. But this is right in the subject matter of solving income in the treasury side of the portfolio for a lot of RIAs, where they're looking at option strategies. The ETFs built here, stuff like the buffer funds, aka shout out sponsor for Innovator. But obviously this is a very competitive market. People want to have the answer, and I think a big side of that private debt push was New York basically saying, we've got a solution to the treasury side of your portfolio. Chicago says we've got options, and frankly, I do think the options are a much better solution to that side of the portfolio. But the private credit is certainly one. It's an argument.
Yeah, I think it's the timing, right? So I don't know that you had to have a love affair before, but now I think you want small parts of this. So when I look at the income side of my portfolio, this is my personal portfolio, not the customers we're working with, it's heavily skewed towards closed-end municipal bond funds. I actually think closed-end municipal bond funds trade reasonably cheaply. If you have a series of them, you look for which ones to start trading rich to NAV or at less of a discount. Maybe you take some profits there, you move it around. Anytime I see 3 or 4% gains in something over a short term that's supposed to yield 5%, I will trade that. But I think that's the bulk of where I hold it. Right now, I'm very comfortable kind of almost at max exposure in my closed-end closed-end municipal bond funds. Having said that, I like a maybe 5% allocation to something like this right now. I think there's that opportunity to really kind of drive some price return as well as that income. So, and kind of, again, just like on your equity side, you want to look, hey, what's my risky exposure equity and where's my kind of, more cautious? I think on your fixed income portfolio, you want to construct it a little bit. So this is kind of my speculative part of my fixed income. I know there's some risk of this. I don't need this money tomorrow. On the other hand, it can really juice those returns.
Love that. First appearance on the show, hitting us right on the subject matter that we want with the income solutions. A lot of that comes over the option side. But hey, to your point, you can get some decent kind of bang for your buck, and some of these bond alternatives, a little bit more speculative kind of fixed income alternative. BIZD, interesting ticker. Peter, give me a thought here to come full circle back to crude and its connection with stocks. Can equities go higher if crude stays at $95, or is that wishful thinking?
I think if it's still here a week and a half from now, we start dragging a little bit. And to be honest, I'm looking, LNG is kind of a little bit more scary to me. That oil is relatively fungible. We're finding ways to move oil in and around. They've reopened the pipeline in Saudi Arabia, and oil is pretty easy. You can move it from one tanker to another. You can offload it relatively easily. To me, it's really a little bit more about what's going on in LNG. And further beyond that, if you Google force majeure, you're seeing a lot of the chemical industry and refiners in Asia ex-China. So whether it's South Korea, Indonesia, the Philippines, India, are starting to shut down. Those often require a 1 to 3 week sort of process to reopen. That's where I start getting worried about the supply chain. So again, my timing is kind of, we got another week to two. I'm not too nervous, but I think if we're still looking this way it comes down, hopefully by then we've had some sort of resolution, we can move on. But
great stuff.
That's my time frame.
All right, really that sounds reasonable.
The chemicals and the derivatives and the downstream oil production, it's important. Again, I haven't heard many people, and we should be talking more. it's not just oil that comes out of the Middle East, right? They were trying to diversify their economies. So they are making these, byproducts. They are refining. That to me is the risk. And at some point, 50% of the world's helium that's a big use in the semiconductor business comes from Qatar. So that's where I get most worried if we see pressure on Taiwan in terms of access to helium, access to LNG, because that's where the chips are, and that's where you start feeling a much worse hit. We don't see that as our base case, but it's something we're on our radar screen.
Okay. Good stuff. Love the approach on income. Love the geopolitics thoughts. Let's have you back and continue the chat sooner than the last break. Appreciate it, Peter. Thank you, sir. Great to see you again.
Sounds awesome. Thanks.
Thanks for jumping on the show, man. Peter Tchir, head of macro strategy at Academy Securities. All right, we got a short innovator break. Then it's back for the gamble. Mr. Pete Najarian standing by. We got a lot to talk about. By the way, it's also election day here in Illinois. So get out to vote March 17th. Happy St. Paddy's. Back in a moment.
With increased volatility, investors are bracing for large market moves, both up and down. Will the market rebound 30%, or will we see a 30% drop? At the end of the day, uncertainty remains a constant. Innovators' floor ETFs are designed for volatile markets. They aim to position portfolios for market moves regardless of direction or magnitude. They are intended as a core equity solution, providing exposure to U.S. equities with built-in downside protection, seeking to deliver more than 70% of the upside and targeting a max loss of 8 to 12% annually. With specified levels of sought-after protection and upside participation, we believe the floor ETFs offer an evergreen strategy designed to allow investors to remain invested regardless of the market's direction.
All right, welcome back to the show here, 2:21 p.m. in Chicago. S&P 500 up 22 and a half, 67.21, just below, maybe not just below, about 80 points below that key level of 6,800. So market is hanging in, but it's having a little bit of trouble. We got election day here in Illinois. It's time for the gamble. Might peruse little Kalshi bets or two with Mr. Pete Najarian joining me on the line, on the Zoom. But I think today also we just got a lot of fun market stuff to talk about. Pete, great to have you back on the show. Hope you had a great weekend.
Really excited. I'm pumped for this week, and we're already, it's Tuesday, man, and I'll tell you what, we'll see what the markets are like tomorrow after St. Paddy's Day when it comes to Chicago. That's what I'm wondering about.
Yeah, right. Who shows up? You know, I was looking, it's like, there's a decent amount of green. I forgot, but I'm only like 12.5% Irish, so maybe 25 max. I feel like I get a pass, but I got green on the show because the Cboe's got the green there in the little. See it?
That's right. Yeah.
Yeah, we'll see how many people call in sick tomorrow.
We will. That'll be good.
Gold at the end of St. Paddy's Day. Let's start with some metals. Pete, I know you got some stocks you're looking at, and I actually really like the stocks that you're looking at, so I do want to get to those. But, watching this group, this category of, the metals has been so important. Gold, silver. The chart has slowed down a little bit here for gold. Should the bugs be worried? I know that you've been watching a lot of call buying and GLD. Is that still there?
The GLD is still there, but it's backed off a little bit, quite honestly, Oliver, from where it was when we were getting hits that were so fast and hitting once, twice, 3 times in a single day. We're not seeing that right now in GLD. And by the way, silver, we have not seen those kind of hits that we were seeing week in and week out. Over the last week or so, we're not seeing it. We've seen the price of silver pulling back just a little bit. We all know that there's a practical side and a usable side for silver, so that's something I think that will give them at least a stop point at some point. But, it's had an unbelievable run, and I think that the options guys have really sniffed it out pretty good. But, things do come to an end, and at least as of right now, I'm not saying it's an end. I think it's more of a pause, because I think there are still going to be people who want to be a little bit safe in what the assets that they've got, and I think gold is in that category. And silver, it's just a matter of when they decide to make up their mind whether or not the software world, the chip world, and all the rest of it is back and ready to really flow.
That brings me into the first category of trades you're watching, which is Bitcoin and crypto. I think that's important because one of the things that was going on, of course, while gold and silver were going nuts, they were sort of at their peak when Bitcoin was at its low. And as volatility in stocks has started to stabilize a bit, Bitcoin started to firm up. Do you see that as that kind of classic risk-on Bitcoin trade coming back? Or is this just bottom fishing? Because I also see the cloud group, which got annihilated, firming up too. Take me through your logic on that one, Pete.
Yeah, I think the way I look at it right now is when we had volatility, let's just go back a little over a week ago, right? 8 days ago, we had the VIX hit 35. And suddenly we're taking a look over at what's going on with Bitcoin specifically, and it was trading 64,000. So that's a pretty big hit. That's because people were starting to get a little bit fearful about what potentially could be going on. That turn, and by the way, that 35 level of the VIX lasted all of about 2 seconds. About 2 seconds it was up there and then started pulling back. And now we find ourselves back down here at a level that's a lot more, comfortable for a lot of people, trading with the VIX trading in the 22s, right? So we're somewhere in the 22s, 22 and a half, call it. And then you start looking over at Bitcoin, you're like, wait a minute. Bitcoin's trading 74,000. It's gone up 10,000 in a very, very short time frame. And within that short time frame, by the way, it's the February early February 2nd level is the levels that we are now with Bitcoin trading at 74,000. So, it just shows you where that risk appetite really is, right? And there was a lot of fear with the VIX up there in 35 and then even staying in the 30s for a little bit before pulling back underneath that. And I think that's why we were seeing that big pullback. And now we're starting to see that big move to the upside back there at 74,000.
It's important because last year with stocks doing well and Bitcoin down, it lost its reliable beta to stocks. It was only like beta to the downside. But if this is a normalization, then at least that makes navigating the crypto world a little bit more clear again, because it is important, I think, that even though Bitcoin is in that year-long downtrend, you can see on the chart I've got up, which has VIX in purple, BTC in the candles, that you still did get big, juicy sell-offs when VIX was up. So the correlation still was working when stocks were volatile, right? So in some ways, I still believe that if VIX is going to come down, I think Bitcoin probably has got a shot here to run again.
Absolutely. I'm right there with you. If we see the VIX crack through 20 and get a little bit closer to that 16, 18 area, somewhere in there, I would imagine that we would see the risk appetite come in pretty big for Bitcoin, and we'd probably be closer to 85,000, something like that. Now that's just me, softballing this thing out there, but I think that the reality is that it is where people want to be. If they want to bring on risk and something that's got that, brings that risk with it, we probably see gold fall back a little bit, and then we start seeing Bitcoin start making that move to the upside. So people that were maybe going to go for gold start shifting over a little bit. And that's something that I think is going to be, hopefully that does play out. I'd love to see the VIX back down there just to see what happens with the markets if we can get back into the upper teens, that level, somewhere close to that.
Fully agree. I don't think that, even though gold was up while stocks were up for a lot of that time, I don't think that the two are necessarily going to have as reliable a relationship. I think gold just it works in a lot of different environments. It worked when stocks were down, worked when stocks were up, and maybe that kind of cools off a little bit as some of the other parts of the portfolio start working again. Maybe like a software, maybe like a Bitcoin, maybe like Peter was just talking about some of the beat up credit financial stuff. That brings me to another group that I think is just, you guys have done a really good job, as good as anybody, Pete, you and John and Mark Rebellion team, I gotta be honest, is keeping the persistent tab on the memory names. It's easy to forget that there is a specific category here of tech that has been making highs over the last 2 weeks. That's amazing.
It is. When you talk about those names that are memory / storage, you have a group that has been absolutely spectacular. And if you look at the year-to-date numbers, I'll give you a quick little rundown through those. But Western Digital, the demand is there. Their AI, their storage, all of that, they're up 75% year-to-date. You got Seagate, that's another one. They've got storage, they've got AI, they got the cloud, 50% to the year to date. Micron, which has earnings coming, I believe it's tomorrow. AI infrastructure, all of that, it's up about 60%, not so bad. But the biggest and the baddest of them all is SanDisk. I mean, the run that we've seen in SanDisk, because they brought up the demand that they've got, the NAND flash memory that they've got, it's only up 200% year to date. Year to date meaning March. That's where we are right now. So a move like that is just unheard of, right? And that's in the face of a pretty rocky sort of a situation that we've got going on. Obviously, we've got the war, but we've got what happens because of that with oil and everything else. And yet, this is an area that's been absolutely fantastic, and the moves to the upside are there. And if you really listen to Meta and all the folks that are out there that are the folks buying this stuff, it really does stand out, whether it's NVIDIA and some of the deals that they've been making, and some of the numbers are just extraordinary, right? I mean, Oliver, we look at these numbers and we almost get used to saying them, but when people are buying billions and billions of dollars worth of some of the what they're getting out there, whether it's memory or whether it's wherever storage, you name it, it's really extraordinary to see the kind of money that's being spent, and Meta is one of the leaders, of course, in that.
Yeah, these charts, I mean, fresh breakout for SanDisk, WDC, monster candle today, Micron. These are not bearish things. Now, they have also been disconnected from the market, to your point, because they have such an idiosyncratic, power behind them, of the secular demand. But at the same time, usually when the momentum favorites of the technology category are making highs, that is a sharp arrow in the quiver for bulls.
Yeah, absolutely. And I think that there are certain stocks that are probably getting beaten up, Oliver, that shouldn't be getting beaten up the way they have. And in terms of that, just seeing them sort of just fading back down again. I think that there's a lot of these big tech names that, I'll give you a great example. NVIDIA is one of those where we just haven't really seen that oomph out of them, right? We've been looking for that to make that move. I will say this, we had some unusual option activity in there today. Massive size coming in, looking for some upside, but will they get it? Because the reality has been, they've been stuck for a while now in this same sort of a range. And, well below 200 for a while. So it's something where it'll be interesting to see if NVIDIA starts to roll and starts to make a move to the upside. Who's next? Because I think there's a pretty nice line that's going to line up right behind them and start making that move along with NVIDIA to the upside.
It's a good point. And if NVIDIA was the lead general of this market, it makes sense that NVIDIA is an even more extreme example of the range the S&P 500 has been in, right? Like NVIDIA for almost so the market's been in a range basically since October. NVIDIA's been in a range since July, essentially. First time it hit 180. I mean, just going nowhere.
Right.
So I got to think that, the old kind of technical trader notion of, wider the base, bigger the break. They've tried to break NVIDIA the downside. It hasn't. All the demand seems to still be there. It's just hard for me, even though I got the yellow light on the risk radar, Pete, it is like the most greenish yellow light I think ever, because I just really have a hard time envisioning charts like NVIDIA suddenly breaking down rather than potentially breaking out. I hope I'm right about that.
One last thing, I'll just throw this in on NVIDIA just real quick, is that, for a long time, NVIDIA was one of these stocks where we looked at it and we said, wow, that PE is somewhere up in the stratosphere. I don't know if I can touch this stock. That is not the case anymore. It is not the case at all. When you take a look at where their PE is now into the low 20s, it's like, well, wait a minute now. That excuse is now gone. There's something else kind of holding it. But at some point, people are going to realize, hey, this PE is at a very, a level where it probably needs to be bought. And I think that's what we're kind of waiting for, is when does that happen where it gets back up and then starts making a move at least to 200. I'm not saying it's got to go to its 52-week highs and all the rest of it, but if they can get over 200, that would be something that they haven't done for a little while.
It's a great point. It's a great point that, this thing, the longer you go sideways, the more your valuation is going to normalize as those earnings build up and accumulate. Hey, Pete, real quick, because my next guy has been trading the potential for a U.S., I don't know what we would call it, an invasion of Cuba. So Chris Brecher's been thinking about some of the travel stuff, and it looks like on your options scan, some of the hospitality and travel stuff popped up. What do you see in that category?
Yeah, I'll tell you what, it's really interesting, because if you go back to March 9th, which is just a little over a week ago, and take a look at what's happened, we had buyers of United Airlines, we had buyers of Delta Airlines, we had buyers of American Airlines, we had buyers of JetBlue, all of those. And JetBlue and American still haven't really gotten much going. But you take a look over at United, that stock was trading 87 last Monday, now it's trading 94. And Delta was trading 57, now it's trading 64, or at least the highs of the day around those ranges. So we're seeing some huge call buying coming in there. And that's the beauty of the options world that I love. That's why you're on the Cboe floor, right? I mean, options are such an unbelievable predictor, I think, oftentimes in these markets. And when they're coming out and they're buying 15,000, 10,000, 21,000, 31,000 options at a clip, that says a lot to me that they're very committed to what they think is going to happen. And by the way, if I look back and I look at American and I look at JetBlue, the options they were buying are way out in September, so that does have a little bit of time. And the American options that they were buying, that was out in the later April, so that's another one that has a little bit more time. So you know what? Two of them have moved pretty substantially enough, and then you've got a little bit of a dragger on the others, but they have plenty of time with the options that they're playing right now in that airline world.
Nice, good eyes. Airlines hopefully stabilizing. I mean, it seems like the consumer demand is there. Prices certainly are not cheap.
I'll just say this real quick.
Yeah,
if
people
you
are going
don't
for
mind.
them anyway.
Sorry to interrupt you, but
very good.
The demand, and it was talked about, what was it just today when the Delta CEO was talking about the demand? The demand is real. I've been there. You've traveled a lot. I travel a lot. John, my brother, travels a lot. I'm literally in an airplane at least 1 or 2 days a week, right? I have not been in an airplane this year that wasn't full. And as a matter of fact, not only full, but over that level. And they're up there going, all right, $500. Who wants to get off?
I know, right?
Who wants to get off? So if they're able to do that, even with oil prices, recently starting to jump up again a little bit, I would say these guys are really well positioned and the demand is absolutely there.
Yeah, very good point. Spike in crude definitely hurt, I think, these stocks. But if it stabilizes, there might be a trade there as well, in addition to consumer demand. My last trip was to Denver. Beautiful trip. Packed airport. That place is just rocking right now. Everybody wants to be in Colorado. And by the way, the lift tickets, like $300.
Yeah, it's unbelievable.
Insane. Yeah, Vail Resort's up 8.5% today. I mean, kind of prohibitive, to be honest. Like, it kind of sucks, but I guess I don't know. That's the that's what skiing is. That's why I never skied when I was a kid. We were too broke. I'm still too broke. I'll go back there next week. Appreciate it, Pete. You the man.
Thank you, brother. Take care, man. See ya.
Good stuff from the travel and the airline sector. Maybe we'll be getting on planes to Cuba soon. Mr. Chris Brecher, TradingNest.tv. Join us, Chris. What's going on, man? Are you skier, snowboarder, or
do you want my
cruise
camera
line?
turned a little, or do you want to see the Cboe pit where I was?
Well, we got the fresh one back here, but I like the comparison.
Okay. Well, I can turn
The
it
new and the
definitely.
old.
There you go. A little better for you.
How you doing? You like this market? VIX elevated, coming in a little bit though here today.
It's really interesting what you were talking about with NVIDIA versus Seagate or SanDisk. Is the big difference, just to tell you real quick, is NVIDIA's a $4 trillion company and SanDisk is $90 billion. So I just think it's a lot easier for those stocks to move. I mean, it's like a big old super tanker there on NVIDIA. I mean, even if I think it's great, it's just really hard to move the needle on that. So I totally, I think it's more fun to trade the SanDisk and the Seagates, smaller cap. And that brings me also to what you were asking about. The way I look at it, I was looking at Marriott, looking at Hilton. We were in them, and they went nutso today. The only difference that I see, and if everybody's wondering, I talked about the crazy idea for 2026 in December about U.S. Annexing Cuba.
By the way, I'm pulling it up. I'm pulling it up here, Chris. Will the U.S. invade Cuba on I'm on Polymarket, and it's going up and to the right, this chart.
Yeah, and then yesterday Trump says that I can take over Cuba any way I want. That's good for us.
I do think Cuba would be more on the Maduro side of the complications and speed than the Iran side, right? I mean,
yeah,
they can share the same climate.
Yeah, the big difference to me is the proximity to Florida and that what they used to have with all the casinos and all that. And I've been going over moving the needle. Like Marriott has 9,000 properties, but it's the perception. I think that's why UAL, Marriott, they're all far outperforming the market today. And we just bought today Norwegian Cruise Lines. That's another one that we've bought 5. So we've bought Fluor. We've talked about Fluor a lot. We talked about we're in Norwegian Cruise Lines, RCL, and we're in Las Vegas Sands.
Okay.
And when you look at it, Las Vegas Sands has a lot better chart than Wynn. But when you look at NCLH, it sure looks a lot like UAL a couple of days ago. Look at that.
Mm-hmm. Trying to find a bottom, trying to find a support. I've got some lines on NCLH too, I think from the last time we spoke, that have held actually an uptrend line and a downtrend line. So it's been in this kind of sideways triangle for the better part of maybe almost 2 years, 18 months. But it's important that those higher lows did hold the last week on Norwegian.
Yeah, even with everything in Iran. The way I look at it, it's interesting that Pete was talking about the options going out to September. We've done a lot. All of these we've done out to June because you still have Iran. So maybe there isn't the urgency to do Cuba till that's done. And that might take June's out 100 days. So that's why we went to June.
Okay. So time, right?
Yeah.
Okay. And in terms of, so I look at the chart for St. NCLH, for example, I see $25 maybe as that potential resistance. How do you structure the trade given the technical situation?
Yeah, well, I like to do where even if I'm wrong, I can make money. Like Floor went down like 3 points and we came out ahead because of the way we structured the trade. So NCLH, we just did it today. So what we did is we went out to June. I'm putting it up here just so you know which one we did.
Okay, I'll pull up the chain on my end too.
Oh, great.
June,
and
what's
so
your
what
expiry?
we did is try to do a spread that takes into account the support. So the support's around that 19, let's say
19,
18 level.
Okay, 18, 19.
So, and that's really pessimistic. But so what we did was a 17, 23, 24. We did a broken wick. So we did it for like 270. So that only protects you to 1970. But if it does go to 25, it goes to $5.
Okay, so you went for the June 27th, right?
Let me get it up there.
Yeah.
June 18th.
Okay.
NCLH. Let me be sure you have it.
Okay.
Yeah, I don't know why it's not showing on yours, but it's we did the 17, 23, 24.
17, 23, 24. Okay. So, all right, nice. So you're basically, you're kind of, the high end of your strike zone is right basically at that resistance. So you start.
And the low is where it stopped.
Nice. Okay, so you're just buying calls throughout that entire range.
Yeah, I mean, it would be easy to say just buy let's say the 22 calls or something, but I don't want to be right on direction but wrong on time and actually lose being right. Yep. So we did it where you're buying the call spread and selling a call spread to lay off your risk.
Okay, makes sense. Kind of the strategy we've been talking about for the market overall in general, right? That kind of stuff makes sense right now.
Yeah, and
IV is elevated too, it looks like.
Pardon me?
It looks like IV is a bit elevated in Norwegian, just looking at the implied volatility on TOS.
Yeah, that's another thing. We put up a bunch of Cuba stocks like you and I have talked about. And in the spirit of Pete and John, we have the call sizzle up because you've seen a lot of things going on in the world, whether it's on poly market or whether it's calls or puts. You're seeing it first in the options, just like Pete mentioned in UAL. Mm-hmm. So we have it listed by call sizzle of all the Cuba stocks. Today, the only one, none of them have that much. I mean, like PEB, the call sizzle is over 3. But if you go to the amount of calls, it's 16. So it's pretty pathetic. So, but UAL, those things kicked in gear. And if he's right, I know that the margins are getting hit with oil, but if you get a lot of routes opening up there, I mean, that stock's 105 real quick.
Yeah, I could see it. I love the idea of casinos in Cuba. I mean, just sign me up. Can't get there fast enough, man. That would be fun as hell. Because I've never heard it's an amazing place. Already.
You wonder if with their crumbling infrastructure, right now they have a blackout. Did you see that? Their energy, they had a blackout yesterday all over the country. You got to think they're not that averse to being a little more capitalistic. Maybe not totally, but it couldn't hurt them.
No, I think a lot of these places all kind of secretly want it, China included. Will the U.S. invade Cuba? Only a 22% chance on poly market, but U.S.-Cuba military clash in 2026 is at 40%, and even the invasion trend is up because it was only at 10%, and it's climbed to 25%. So, I mean, heck, poly market's got an invasion of Colombia at 8%, so we might just start checking off. We might just be playing Risk with, just the southern half of the map here. Give me a last thought, Chris. I'll let you go.
It just seems to me, this is why I did that crazy idea for 2026 about USA annexing Cuba, is like you said, it's just down the street from Miami. You would think that would be a great tourist thing.
No, that's true. I agree. I sympathize. I want it to happen. I want to go there. Were there casinos? If you build it, they will come, or at least OJ will. I'll be there. Thanks, Chris. Great eyes on that trade.
Thanks. The other thing, I like to back it up with a chart. And I'm telling you, Norwegian Cruise,
Okay, let me pull it up again real quick.
UAL, they all have the same charts.
Yeah, you're right, and that they're finding support, right? I do like that.
Yeah, and also that little indecision candle followed by a green candle to the upside. So many of them have that the last couple of days.
Yeah, that wick basically that hit the low and then held for multiple sessions. Oh, I had it up. There we go. There it is. Nice. Thanks, Chris. Appreciate you as always. Thanks for coming on the show.
Oh, thanks for having me on. Say hi to Pete and John for me.
You got it. Will do.
All right.
Chris Brecher, TradingNest.tv. Charlie Moon on deck to take us into the closing bell here. Let's revisit Micron. Let's take a look at the options going into that. Be right back.
With increased volatility, investors are bracing for large market moves, both up and down. Will the market rebound 30%, or will we see a 30% drop? At the end of the day, uncertainty remains a constant. Innovators' floor ETFs are designed for volatile markets. They aim to position portfolios for market moves regardless of direction or magnitude. They are intended as a core equity solution, providing exposure to U.S. equities with built-in downside protection, seeking to deliver more than 70% of the upside and targeting a max loss of 8 to 12% annually. With specified levels of sought-after protection and upside participation, we believe the floor ETFs offer an evergreen strategy designed to allow investors to remain invested regardless of the market's direction.
All right, welcome back here. We got 9 minutes into the bell, and I got Charlie Moon on deck, Prosper Trading Academy, zero-day trading tech man. Charlie, the kind of sleeper chart, I feel like not just because they've got earnings, though. We talked about a little bit with Pete, is Micron. I mean, this making highs going into tomorrow's report seems like a big deal. Tell me what you're thinking.
Yeah, there's a lot of speculation. That guidance is going to be great because they feel that demand, especially related to NVIDIA, is not going to be there. But I strongly disagree. It's been pretty evident that this is a sector in demand, that Wall Street still believes that this is going to be the case. they are still piling it on. This is, one of the rare stocks in this environment that is not only holding their highs, but making new highs from the tech side. We're seeing that a little bit more with energy related stocks, but with these tech stocks, especially with Micron, we talk about something that's been a bit oversaturated, overvalued, and here we are, new all-time highs today going into the close. So, it'll be interesting to see how the stock may react. The Wall Street may have quote unquote priced in the news, but if Micron's guidance is anything comparable to like SanDisk, for example, I sure have a hard enough time thinking that this stock isn't going to continue to rise over the foreseeable future.
Now is a good time to go to a little AI, I think, for some help. I love just plugging stuff into Google Gemini now. Just type it into the search bar. It's so amazing. Here's the AI overview of Micron earnings. High growth quarter. Estimates range up to $20 billion in revenue. EPS to $9.21. 460% year-over-year increase in earnings. It's just mind-blowing stuff, man.
Yeah, I mean, Samsung's already kind of come out and said, well, demand is too high. We don't have enough inventory, so, we're just going to jack up prices and that's just going to help our margins. And like I said, it's just, we look at comparables, we look at, the fellow industry, and then we look at how this is relatable to the future of what the markets are really predicated on, which is AI growth right now. I just don't see the stock, disappointing. It wouldn't surprise me one bit if they just obliterate these numbers and really give a strong, emphasis on full year guidance for, the rest of this year. It's just whether the markets are going to react in accordance. SanDisk, their numbers puts them, way, way, way above where they're currently being valued, in my opinion. They've kind of slowed down, but they're starting to pick up steam. And again, if Micron goes, the industry goes, SanDisk is going to be making that big run for $1,000 per share.
Incredible figure there too, and chart breaking out. The thing is with a lot of these, Charlie, is that this is kind of, I think, how they have such power is because they were the neglected category for so long, where people were describing them, kind of rightfully so, as a sort of legacy memory, kind of slower, very cyclical, right? Just kind of dependent on the economy. And then now finally 2 years or whatever after the big open, chat GPT and LLM breakthrough, you're getting this secular demand. And so the valuations had a lot of room to grow. And I think to some extent they still might.
Oh yeah, 100%. And again, it's highly dependent on growth and demand. And we relate this in we talk a lot about the U.S. based companies and the U.S. based demand. But truth be told, if we look at overseas and in Asia, the demand's even stronger. The demand's even greater. And there's just so many of these companies that could provide these kind of components. Now, again, there's been a bit of a knockback in relation to NVIDIA and Vera, but I think that those rumors are really unfounded. At NVIDIA's conference right now, Micron has their own booth, and they're actually showcasing their new product. And again, this is something that just coincides with the growth and technology growth and advancements that's being centered around AI and AI components.
So you're saying friendly relationship. Am I hearing you right?
Yeah, there has been and always will be.
Yeah.
They gave him a shout out. Jensen gave him a shout out yesterday.
Yeah. I think also that's important too, because there is some degree of a, divide and conquer where certain, companies are going to handle certain parts of the stack, and memory is going to be an obviously hugely important one. By the way, that's a good reminder too that we got the GTC event, Jensen Huang talking at that right now. I'm going to pull up some of those comments as well. Solidified their strategic partnership, talking about, how they're a key partner. So to your point, that's always good news. In terms of how the trade looks, obviously pretty elevated vol. It's kind of come in a tiny little bit in the last couple of days going into this earnings. Thoughts on trading this group? Charlie, it sounds like generally you lean positive. Is that right?
I do, and again, my biggest concern is, has the market already started pricing in, what the expectations are? And, we relate this to actually NVIDIA themselves, right? NVIDIA, kind of shocked the world when they had that extremely elevated, guidance report where they basically were 40 billion higher than the next analyst estimates. And for the next 4 quarters, no matter how high these analyst estimates were, they were just blowing out of the water. And now we're kind of getting towards that mean where the analysts are kind of, putting them in this atmospheric, level, and those expectations are at those atmospheric levels. And so it's becoming more difficult for NVIDIA to meet and exceed, but they continue to do so. This is where we have to wonder where Micron is in relation to analyst estimates. The demand is so strong. I mean, quite honestly, Jensen said that about the same thing about Micron. They said the same thing about Samsung. He was, photographed in Korea working or eating dinner, right, a traditional dinner, a fried chicken and beer with, one of the heads of Samsung and the head of Hyundai. And it was purely to try and curry favor so they could get these components so they could have their production at least maintain on the trajectory that they were anticipating. And so with this demand and plus this sharper increase in price points for these products, I just don't see how Micron is going to disappoint. And again, when I relay this to others in the industry that have already reported, like Seagate and Western Digital, but the one that stands out to me is SanDisk, and that earnings report was so far head and shoulders above expectations. I just feel like Micron's going to be coming in and really surprising analysts. I think they're just going to come and overshoot way above where estimates are going to be.
All right, nice, well argued, love it. Sifting through the news flow. There's the bell real quick. Charlie, give me a 60-second on the other group that's holding in pretty well, which is crypto. We talked about Bitcoin itself. Let's revisit the stocks connected to it, though. You got any favorites to play here on a crypto comeback?
100% Circle. Circle, we talked about this before on that breakout of 94. I said their upward trajectory is around 140, 150. They're almost there.
You got that.
Coinbase is playing a little bit catch up as well. But I think the two that we have to pay attention to is MSTR. MSTR finally got above their 50 simple moving average and closed above this level. First time they've closed above this level since October 6th of last year. And so for me, this now, if Bitcoin continues to rise, which I've actually jokingly have been saying to Scott and everybody else in my group that Bitcoin's going to make a run for 100K, but I mean, they haven't slowed down since this Middle East conflict has started. MSTR is really well positioned to make a run for 175. And then the other one that I want to pay attention to is BMNR, Bitmine. And BMNR right now is slowing down at 24.5. But I feel like this is close to being that breakout play, and they're going to make this run to 27. And if Ethereum starts picking up steam, once they get above 27, I mean, this thing could shoot straight up to like 38 to 50 in a blink of an eye. So, we're starting to see a lot of these reversal signs coming into the picture, a lot more confirmation. Coinbase really holding up well. They also have closed above the 50 SMA. I'm looking for a breakout above 215. I think that the upside target is 250.
So it kind of baseline and then broke out. Circle chart, you nailed that one. MSTR also above the 50-day. I think that's very interesting. And by the way, just from my perspective, the way I see the charts, as a crypto cynic and as an MSTR general like perma bear, 100K is like very much within my framework too. Like I
100%.
was surprised that we never went, we got to like 97 or something in January, but I generally lean risk on kind of for the market as a whole, and I could totally see Bitcoin even within the bearish regime go back to 95 or 100. So, and Circle has been a great way to play it. I think I favor maybe like Coinbase over a BM&R master, but that's just my 2 cents, my 2 Satoshis, maybe. Charlie, thanks, man. Appreciate you.
Appreciate you, brother.
All right, good eyes, Charlie Moon, Prosper Trading Academy. Good eyes on Circle 2 in our last discussion. Scan the QR code, work with Charlie at Prosper. We are out of here. Have a great night. I hope you enjoyed the slightly longer show. Bye-bye.